Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 8th. Kind of a light day again today. We got the weekly jobless claims. So last week we had 255,000 people apply for unemployment people this time around. So again, great numbers here we're seeing as we have been seeing more jobs being created here. Let's kind of jump into the headline news, and this is the big one. Stock market's still mixed. S&P is the only one that's kind of struggling. They're just barely in the negative territory, but as possible they could peak up. But today is Super Thursday, so right now as we're speaking, we have the Comey testimony. News kind of leaked out yesterday. That's why we had a little bit of a reverse in mortgage-backed securities and had a slight improvement. Stocks improved a little bit more, primarily because it looks like they got the feeling that maybe there's nothing damaging to President Trump. So, and it's kind of going in now. So they don't know what kind of questions are going to be asked nor how he's going to answer them. So there's always a little bit of risk there. But in general, it doesn't look like anything, anything that could be too hurtful for the president may be brought up. On the other news, we got the ECB today. They came in with their announcement, basically left the rates unchanged, basically said that deflation seems to be in check and inflation low, which is helping out mortgage bonds. Basically, they kind of left it. They feel that rates will be low for quite some time, so that was their forecast. They didn't say anything about adjustments to the QE, nor did they say anything about balance sheets, maybe unloading their balance sheet like our Fed has talked about later this year. Also underway is the UK Parliament. They call it the snap election going on now. We probably won't know more results of that till tomorrow, but the Conservatives are favored to win, but as we know, polls don't always come true, so there's always a little bit of risk involved with that. So that's why the investors are a little bit apprehensive about it, and why that's important is because if Conservatives don't win, then we have a little uncertainty as to how the negotiations will go forward with the Brexit going on there. So that's why that gets to be a little bit more. That uncertainty is making them a little bit more risk averse there. So let's take a look at the bond market here, and as you can see, we did. Earlier in the week, we did Tuesday. We had that nice little reach, almost touching the first level resistance. Now we got the second resistance a little bit lower here. 10-day moving average just moved above the 200-day moving average, and that's where we're kind of resting at now. Right now, we're down about 6 basis points from where we left off yesterday. As you can see, we did drop down a little bit, which is kind of good because, like I said, this opening gap here at some point is going to get closed, and pretty much got closed yesterday and today. So that gap is more or less officially closed. Now, if we can hang in there, we could potentially see some more improvement. But again, this, right now we're starting to get a little bit of a trend here where rates are increasing. So we're starting to see a couple of days here where the trend is going lower, which is rates going up. But if we can hang in there, if we can get this sideways movement, we may have a little bit of improvement, because next week we got the FOMC, and it's expected that they're going to raise interest rates. And so when the Fed does that, that fights off any possibility of inflation, which helps out mortgage-backed securities in that sense, because over time inflation erodes the value of it, and this helps protect that value. And so if we could play into next week, that would be great. But be careful over here. Again, we're kind of getting this trend where it could worsen a little bit more. And even going into next week, you might want to kind of keep a finger on the trigger if you have not locked in yet in terms if you're in an escrow for a refinance or purchase. All right, so that pretty much concludes it. Rates are a little bit worse because it depends on when investors came out. So if investors came out with a price about here, and didn't do any price for the worse, they're probably a little bit worse. But if you look at compared to where we left off yesterday, they're pretty relatively the same pricing here. So that pretty much concludes it today. If you guys want to get more updates throughout the day, just come over to Twitter. Might be a good idea today, especially with everything that's going on. Just come over to Mike Bjork on Twitter and get more updates as they come out from the ECB, the Comey testimony, to the elections in London and such. So anyways, also if you guys are in the market for a refinance or a purchase, I am here. I'm a loan originator, and I can help you with those mortgage needs. Feel free just to reach out. Take care. Have a great day. Bye-bye.